We talked yesterday for a few minutes about the Japanese yen. Actually ended up taking a short position on the pound yen, which is of course why I'm so happy to talk about it today, because I got a good trade running here. I shorted the pound yen. Not a trade that I take that often, but I'm very cautious to short yen crosses because, of course, they're number one, they just move a ton. So I know you've talked about this before, being really cautious if you're going to ever try and do some sort of dollar cost averaging on the yen crosses because they move so violently. But I got this reading over and over and over and finally got a setup that I was like, okay, I'll take the risk. Shorted pound yen, dropping like a rock here today. What are your thoughts on yen pairs, even if you don't necessarily trade them too often yourself? You talked about them yesterday and you put out a really great point about just kind of how the Bank of Japan seems to want to hike rates. So what are your thoughts on yen right now?
Yeah, I think we are seeing pretty good inflow by the bulls in the yen. And to be honest, the fact that we are maintaining a relatively stable price is quite supportive in my view. I mean, if we look at the yen's previous behavior, we don't often see it. I mean, in the grand scheme of things, we look at other pairs, this isn't anything crazy. But again, if we look at specifically how the yen typically moves, it's normally an intervention or a very risk-off move. Something happens, might give some temporary support, then it just continues its way down. However, since July, obviously we've seen support, then we saw it come back down, but now we don't seem to really be seeing much continuation, which I think on a price action perspective is quite supportive for the yen long positions that we're seeing on the edge finder at the moment. So maybe this is the start of something new. Maybe it's the start of a new trend. I don't know, to be honest, because again, the yen isn't my friend. I've been burnt on it a few times, so I'm not going to try and sit here and say I'm calling the bottom of the yen. But again, it could be. I think it's got potential, is what I'll say.
Yeah, I've got a kind of a longer term idea here on the pound yen, mostly on the short side. I mean, the idea here with pound yen, I mean, you are talking about the account blower for a lot of Forex traders because this thing moves a lot more. I mean, this move right here in just a little bit of time is 2,700 pips, which again, if you are trying a dollar cost averaging approach, one move like that can be incredibly painful. So it is, it is not for the faint of heart by any means. I've got a very small short position with willingness to add, but would kill the trade if we couldn't hold this 199 level. But I do think that there's a good solid chance that we do see the pound yen continue lower here for now. I mean, we're getting a lot of confirmation here. Maybe the basic keeping it so simple is that the pound or the Bank of England, the European Union or the ECB, the US, these places are all, and Canada, by the way, they're all looking to cut interest rates. So when they're looking to cut interest rates and Japan is looking to actually hike them, and by the way, they had some good data overnight that came out that supported their desire to hike rates. When a central bank wants to do something, they'll find ways to get there. And most of the time, so Bank of England, Bank of Canada, US, we all want to cut rates. But meanwhile, the Japan government, the Bank of Japan, wants to hike them. So we see pound yen down 0.77, dollar yen down 1% on the day. I mean, you could put that into pip format. I just prefer percentages, but 150 something pips there for dollar yen. Really some craziness. But outside of the yen, James, what else are you watching here? Are you looking at the dollar at all?
Yep, so I'm back into euro dollar shorts. Nothing too big in terms of position sizing, but I'm just currently building some more shorts, waiting for obviously NFP on Friday. So we had ad blocker, hold on. So yeah, if we look at the data that's been coming out of the US, I would lean more towards NFP, maybe not overshooting, maybe nothing too hot, but at least being on par with what it was previously. So obviously we've seen an uptick for the past 3 releases. Unemployment claims came down. Yeah, that's right. Yeah, unemployment rates came down. We've had unemployment claims. Unemployment rate also come down. We've had ADP, obviously, which isn't a huge signal for NFP, but it's it could be a rough gauge, I guess. That came out quite hot today. So I'm pretty optimistic about NFP, but we will see. So continuing dollar bullishness, but to be honest, the way the dollar's looking right now, I'm just very hesitant, because if we do seem to break below this 107 level, I think I'm going to hop off the euro-dollar shorts temporarily and just sort of reassess the situation.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
All right, services PMI is out, and a little bit of at least softness right now for the dollar. There it is.
Yeah, tick down. Came out at 52.8.
Okay, so a little bit of weakness for ISM services PMI, 52.8 as opposed to 54.2. That's actually a pretty big miss. Stocks mixed on that response. Gold is higher. That would make a lot of sense. Dollar index lower here. Oil's flat, Bitcoin flat. And again, that's signaling just maybe a little bit more softness. It's been a theme that we've seen here this week, is just a little bit of softness in U.S. economic data. But then when it comes to currencies, what makes this difficult, James, is it's like, okay, if the dollar's weaker, how do the other ones compare? Are they even more weak than that, or are they holding up well? So guess we'll have to see. But yeah, very interesting response there. 52.8, much lower than expected. That, however, is kind of countered a little bit by the higher than expected numbers out of ADP, NFP numbers this morning as well. Got Euro trading higher here just a little bit. S&P and NASDAQ completely flat. Dow Jones slightly in the red. Also, just on the stock front for a second, we had Google reported their earnings. Missed on revenue. But these kinds of companies, man, if you are a Google in this world, you're like the giant leading company, you have to smash expectations. Anything short of exceptional in the stock market right now. And this is why, a lot of people are a little bit nervous about stocks, right? Is because right now you got to be perfect. And if you're not perfect, you get smacked hard like this. I mean, Google is down 8% on the day. You have to really just smash earnings. Same thing with NVIDIA. NVIDIA has been beating revenues and still the stock is getting killed. So crazy times. NASDAQ has not been very good for me recently. You want to know where the momentum is right now? Momentum's in gold. Look at the difference in the chart, right? There's no audio. I think that there is, but please let me know if not. Nick, you're very strong on USD, but tech shows different picture. I'm not sure what you mean. Could you clarify what you mean by that, R. Patel? So, you guys want to know my weirdest thing about me? Is I drink soda sometimes in the morning. And I just want to also make it very well known that this YouTube channel is built on Diet Coke. I drink way too much of this stuff. But everybody does something, right? The way I think about this, and this is how I justify doing bad things like drinking soda too much. Everybody does something bad. I don't really smoke that much. Actually, I really don't like to smoke at all. I don't drink that much. I don't eat too much sugar. But this stuff, it's got a hold on me like no other, man. Anyways, back to my chart. Also, what's you got? Let's get personal for a second, everybody in the chat. What's your vice? What's your thing that you do that's bad that you shouldn't? And if it's rated X or R, leave it at home. But if it's something like I eat too much candy, you can share that. Just don't share like, oh, I'm not going to say something because I'll get demonetized. But don't say something that's going to demonetize my channel. Coffee. Okay. Yep. My brother-in-law, coffee fiend, if he's listening. Absolute coffee fiend. Never seen a man put down so much coffee in one day. Coffee gummy bears. Interesting. But see, that's what it is. It's always something like that. You know, it's always something that comes out of left field. Like, I feel like soda, I guess. I don't think a lot of people are like straight up addicted. Well, actually, I don't know. Diet Coke, I think a lot of people are actually low-key addicted to soda. Like, I think there's probably something in the water there. Now this is beyond me. I can't do that. But everybody's addiction sounds ludicrous to everyone else that doesn't do it. So I can't, we listen and we don't judge kind of thing. Indian masala tea. I've never had that. Check my trades every 5 minutes. Okay, that's valid. I do that too. Okay, maybe I just have multiple addictions. How to break that habit? If you are somebody who struggles with constantly staring at the chart, I don't necessarily think that that's bad. Like, I watch charts all the time, and there is a little bit of an addiction there, I think. But what is more important is that you don't make the wrong action with that. Like, I check prices with you guys all the time, probably like many times throughout the day, but I'm not actually pulling the trigger on trades throughout the day. That is the danger of it, is if you check trades too much and you're somebody who's very impulsive with your trading, it's really easy to be like, oh, this looks good, that looks good, I gotta take profits, or I gotta trail stop. Like, you can overwork the system, if you will. Anyways, let me get back to my my charting here. You got gold here ripping through those highs. Wow. Really good momentum. You can see our momentum indicator looks beautiful here. This is a great example. Screenshot that kind of thing. 2800, 2780. Maybe that's where we pull back to if we were to see one. But I'm not somebody who's betting on that, right? So actually, I want to show you something. Under the sentiment and positioning tools, you can go to your put to call ratio in the Edge Finder. And I've been showing this because I'm so thrilled about this new indicator. If we select for gold here, look at this, guys. Edge Finder users, have you guys tried this out? Have you checked this out yet? Go to your put to call ratio and select gold as your symbol in the top right. Is anybody using this indicator? Let me know in the chat if you are using the put to call ratio. If you're a put to call person like me, let me know, because this is one of my, if not my favorite sentiment indicator on the Edge Finder. It might be more interesting to me than COT data. I know everybody loves their COT data too, track institutional money. I get it. I love it too. But man, do I love the put to call ratio. It is such a powerful indicator. So here's the thing about this gold rally. When we're in this territory, that just shows me that the put to call ratio is somewhat balanced. It's not freakishly everyone's bullish or freakishly everyone's bearish. But when we get down into this territory, guys, when this gets really low, that is an indicator that I pay attention to. What it's telling me is that extreme greed for an asset, in this case gold, there's incredible extreme greed for gold happening right now. But let's go look at like December 30th. Let's go look at the price of gold December 30th. And where is that? December 30th. Why am I having such a hard time with this? There it is. So at this point, you got extreme greed for gold, which short term created a little bit of a sell-off. It wasn't huge, but what you can see here is that we poked into extreme greed right here. Gold prices relaxed a little bit, and the put call ratio kind of proceeded to go sideways for some time. And throughout this whole move, this is maybe the most powerful thing. If you're somebody who's like, I'm sitting here and I'm just in shorts on gold, first of all, you're not alone. A lot of people are trying to short gold as it just rips to all-time highs. That is very often what traders get stuck in. But look at this. The difference here is that the put to call ratio through this whole period basically did not tell you that it was overbought. Look at this. You didn't get an overbought reading on gold until January 31st. Okay? January 31st is right here. So we started to see the put to call ratio indicate we may be entering into an overbought period at that point. Now you can see overbought readings are difficult because it's very hard to time the top, but we have breached further into that oversold condition. I'm sorry, overbought condition here because the put to call ratios become more extreme. That's what I want to show you, is that as you get this very extreme, what usually happens is when you poke further into that put to call ratio, you usually get a snapback. And so what does that usually mean? Well, that usually means the market's balancing out and retracing. Now, I don't necessarily bet on that retracement, but I would be very cautious chasing gold at 28.66. I think most likely there is a pullback coming, but I don't necessarily think the market is bearish from here. In fact, gold looks really bullish overall. I don't have personally a setup for gold. I'm not looking to buy it. You can see it's not on my current list of setups. Gold is getting a neutral reading on the edge finder. So probably not a trade setup for me. But if you are trading gold, guys, again, make sure you're using the right tools so that you can spot sentiment. You know, if you're looking at the put to call ratio, you're saying, look, I don't want to buy gold when everybody's frenzy buying gold already. Basically, people are hitting the call button like crazy. They're buying calls on the options market on gold heavily. That's a really solid indicator that market sentiment is extreme. Everyone's bullish on gold right now. Let's say I like both these setups as well. Setup 1, setup 2. I like both of those, okay? Both of those, as long as we have edge finder confirmation. Again, that's critical to my trading. I do not touch something unless I have a good edge finder reason 95% of the time. I've got to see the pullback happen, right? Scenario 1 or scenario 2. But I do not trade. I'm not going to try and short this down to here. Or if we saw the big breakout, I'm absolutely not going to try and catch this move, right? Because if I am fundamentally bullish on something or fundamentally bearish on something like pound yen, I believe that the most likely direction is higher, right? So if I believe with my analysis, if the edge finder gives me that confirmation, if the technicals overall look bullish, if I believe something is most likely to be more bullish than bearish, I am not going to try and get cute or fancy trading these little pullbacks, right? Because there's also the scenario, and it happens sometimes, it's actually kind of frustrating, from here, and, you know, trading gods, please don't let this happen. If you get, doesn't need to be that big, hold on. If you get this, right? I will, number one, I'll be pissed. But number two, if I tried to get cute and trade these little short for the pullback kind of concepts, there's nothing there for me. There's no edge for me in doing that. If I have a fundamentally bullish reason to get long the NASDAQ, right? I need to do so only longs, or if I'm bearish, only shorts. I'm not going to break my rules to try and capture these little cute moves just to appease my monkey brain that wants to place a trade today. Does that make sense? Are we on the same page with it? Does type yes in the chat if that makes sense.
So if we go down to the weekly chart, or up to the weekly chart, right, we are in an uptrend stroke range. And this bad boy has been ranging for months. It's been ranging since September, right? And all I'm trying to do, guys, is take price from this very bullish candle from the bottom of the range and take price to the top of the range and this 1.1350 level, okay? Now, I've been in and out of this pound Swiss franc trade for about a week, right? Taking profits. And I'm still looking at this buy trade today as well, right? I mean, if you look at the day chart, it's a beautiful setup in terms of trend and structure, right? We're in an uptrend. Yeah, we're getting higher lows. These highs here have broke with this big bullish candle. And you know, we've had a nice retrace, which gives us a nice amount of room to come up to the top of this range. We're looking at about 50 pips at current price, right? So, yeah, looking to buy pound Swiss francs. So weekly and daily tell me that I can buy this pair, okay? Just the quick analysis I showed you there, right? But we need to find an entry. Right, so anyone can pick a direction like Tom, that's in an uptrend, let's buy it. But you need to find the right entry, guys, all right? So if we drop down to the H4 now, we are in a H4 uptrend. Can I just say how crazy the gaps were on Monday morning? Yeah, I'm sure you've discussed that on the show, right? But we're in a H4 uptrend. And now we find ourselves, you know, in a bit of consolidation, a bit of a range at this level, right? But we can see this better on the H1 chart, right? So if we look at the H1 chart now, price is just, like I say, right? There's this level here on the H1, this H1 high that we're getting a bit of a reaction from. And we've got these lows here. So all I'm looking or waiting for to take a trade on pound Swiss franc is a break through this level. If we get a nice bullish H1 candle that breaks through this level here, I will be looking to buy pound Swiss franc back up to this level. All right, guys, so we'll see how this pans out. That's what I'm waiting for there. Just wanted to share that trade idea with you. So yeah, right, let's take a look at a few of your questions, guys. So everyone is looking at US dollar pairs. So we got Iqbal, Euro US dollar, Adam, US dollar CAD, Oratil Will, I apologize for the pronunciation, US dollar yen, Aussie dollar US dollar. Okay, so let's have a look at US dollar Canadian dollar, guys, because a few of you are looking at that. Now, generally speaking, I am looking at dollar weakness, okay? Because if we start with the weekly chart, I mean, just look at this weekly candle. It hasn't finished forming yet, but we know a lot of the US dollar majors are at key weekly resistance or support levels, right? And this US dollar Canadian dollar is no difference, right? This is a key, I say it 3 times because it's key resistance level for US dollar CAD, right? And ever since it's hit that level, look at this weekly candle, right? I mean, it hasn't finished forming yet, but you know, there's only a couple of days left and that's pretty bearish, right? So let's drop down to the day chart. It's worth pointing out that this still is in an uptrend, right? But we're getting this huge reaction at this weekly resistance level. And like I say, it's the same for a lot of US dollar pairs. If we drop down to the day chart, now we was in this range, right? We was in this range from here to here, right? And even these candles were not breaking out of this range. It wasn't until we got these crazy gap ups on Monday. And these crazy gap ups have made technical analysis a little bit more difficult. There's a little bit more ambiguity when you get these massive gap ups or gap downs. And we really saw some on US dollar pairs. But again, look at that daily candle. That has finished forming. Look at that daily candle. That has finished forming, right? Now, we are in this range, right? And all I want to see for me to start selling US dollar, Canadian dollar is 2 things. I would consider selling it if we get a break of this level, right? So if we get a candle, doesn't really matter what it looks like, but the body of the candle breaks these lows, then I will be selling this. I will be selling US dollar, Canadian dollar, right? Potentially back down to this 4,000 level, right? All right, this is the next piece of support through here. All right, now the other scenario is because I want to sell this because we're having such a bounce off a weekly level. I'm not interested in buying it. The alternative will be price comes back to the top of this range and then we see another bearish candle form, right? Something like this. Again, it could look like that. It could have a big bearish red candle. Excuse my candles. I've been drinking. I haven't really. All right, but big bearish candles like this at the top of this range, I would also consider selling down to here, if not further.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.